All right, folks, welcome to this week's Forex commentary. And I think the early portion of this week would mark the closing of July's trading. And I'm thinking that whatever thing we'll be discussing today would echo into August trading. And yes, we'll go through it. So here is the dollar index, the monthly time frame. And while we're still going to go to lower time frame to do like a recap of last week's price action, because there were things we talked about last week. We had a lot of discussions about what markets could potentially do. And during the week, the markets played out, okay, how the markets would play out. And I kind of like had, I did some sort of commentary on my Twitter when I was talking about dollar index and what I thought dollar index was going to do for the weekly range, because at the time of the recording, which is something you want to note, because like currently I'm not doing the market review on Monday morning, which I'm sure everyone will begin to understand why I used to do the market reviews on Monday, because I see market open, I see Sundays open primarily. And, in this kind of conditions where we find ourselves in, the markets could be extremely volatile during the weekend, and markets open with gaps and stuff like that. And it kind of like changes everything, okay? And that's why when I wait to see markets open on Monday, I get additional details with, the Sunday's trading, Sunday markets open, right? And sometimes it gives a more nuanced perspective to what I think the markets are likely to do or how the weekly range is likely to unfold. And other times, I just use it to validate my own bias, right? So we have about, say, 3 days, say 4 days for the end of July's trading. And currently, we are having a bullish month, right? And that's actually going to be important going into August, because I talked about things of like the high time from institutional order flow, which one of the tools we use is the COT hedging program, and we understand that dollar index is bullish based off of the high time from institutional order flow, and we haven't seen it reflect in price action for months now, and it's kind of like very, very, very unsettling, because if we look at APS, like if you look at USD JPY might not be as bearish, it might be in consolidation, because this is obviously consolidation. It's like making some kind of retracement into the range, but it's very weak. I mean, the trend is very weak, and which is obvious because dollar index itself is showing heavy weakness, and the yen is showing relative weakness as well. So we're seeing dollar index return, or USD JPY return back into range, albeit bullish, but you can see how the market returns back into discount, and stuff like that. So while we're seeing a market that is slightly responding to the high time from institutional order flow, I think markets would actually do more if we saw the dollar index actually being bullish. Okay, but dollar index isn't bullish, and it takes a lot for we to confirm that DXY is bullish. Currently, DXY is bearish, and we're trying to look at the markets based off of that narrative that dollar index is bullish. And the reason why we think dollar index is bullish right now is based off of market structure, not high time from institutional order flow, because you can define institutional order flow via quantitative analysis and qualitative analysis, obviously. So last week when I was looking at DXY, if you want to look at the commentary from last week, because we're going to go through my Twitter account so that you can see how I was able to manage my own expectations, right? So we had a closing basis like this, which is bullish for DXY, and I was talking about the possibility that we see DXY trade into this relatively equal highs, because we've seen consecutively bullish weeks, and we're seeing markets maintain a bullish swing point, because this swing point was bullish. we had an inversion, we have markets respect this inversion fair value gap. Even if prices didn't make a retest, market don't necessarily have to make a retest of the inversion before you can say the markets are respecting the inversion fair value gap, right? So there was always the potential that the markets trade into this highs, okay, this premium, this relatively equal highs as a near-term draw on liquidity. But then we also talked about the fact that market structure is bearish and DXY traded into a premium level, and it could, for some reason, cause the dollar index to continue to go lower, right? And really, we said we're just going to manage our expectation based off of market structure during the week. And one of the things I did was, I shared my perspective on Twitter because we didn't have the benefit of the overnight session on Monday. So in the early portion of Monday, that was during the London session, we're seeing DXY, show appear bearish. And there's a fair value gap here, an inversion fair value gap, a balanced price range here. So I was talking about how I wanted to see DXY trade into the balanced price range, and we kind of had the 4 hour time frame validate, the high time frames draw on liquidity, which was the weekly balanced price range. Because if you look closely here, this consecutive upwards candle, the market closed below this consecutive upwards candle. So that's a change in the state in delivery. Now, it's a change in the state in delivery, but it doesn't mean much by itself because we weren't sure what the markets were going to do. I wasn't sure personally if the markets were going to continue going higher or if the markets were going to go lower. Okay, and I wanted to see more detail, and I waited for markets to trade through the London session and the New York session. So after the London and the New York session, we have a mitigation block here, and markets were trading into it, and we have the draw on liquidity here between 97685 and 9742. So that was primarily the levels I was watching for DXY, and we saw markets just capitalize on the mitigation block and trade into objectives, and even more into more sell-side objectives, because below the weekly balance price range, we had a daily fair value gap, which was this fair value gap here. And it was the fair value gap here. I was pointing out, final objective. That's what we're going to see DXY trading into this fair value gap here. So we had a change in the state in delivery. We had a change in state in delivery here. We have an order block, which is the change in state in delivery. We have a mitigation block here, and we have this setup form at this time of day, because I was talking about on this day why I wanted to see the New York session. I think I made that commentary, when I said ideally the session we're looking to trade today is New York, simply because the primary objective was met yesterday. That was the weekly balance price range on dollar index. So there's no telling if the long-term bias has been established, not until the weekly balance price range has been traded through and prices settles below. Okay, and I was talking about how although market structure favors a continuation low on dollar index, but there is no structure from intraday price action to validate this bias. So I wait for more data. I was trying to profile market so everyone sees what it means to profile the markets, right? So primarily, what I wanted to see on the weekly time frame, if we wanted to validate long-term continuation dollar index, is if we saw the markets, not just straight into this balance price range, but in fact invert the balance price range. So if we had some kind of inversion here, say, market closes below here, then this week would have been a lot more easier and less complicated, because we'll just be anticipating, primarily I'll be anticipating the early portion of this week to make a retest, to see if the markets are going to make a retest of it and continuation into sell side. But apparently that's not what we're seeing. We're seeing the markets respect the swing point, because this swing point is high resistance. And why is this swing point high resistance? Because we have an inversion of this fair value gap, making this level high resistance. So when the market's running into this last down close candle, you can anticipate the level of rejection, which was overlapping this daily fair value gap here. So this week is kind of like, it's going to be as complicated as last week, okay, because now we have the markets trade into a discount, and I don't know if what we're seeing here, this run below this old low here, it's a total soup because the high time from institutional order from dollar index is bullish. But we don't have a weekly time frame to validate a change in state in delivery, because until we have a change in state in delivery on a weekly time frame, that's when we can validate that market structures are aligned. Market structure aligns with the high time frame institutional order flow, which is bullish for DXY, but that's not the case. So we're still going to be bearish, but we have to look at price action. Really, we have to look at price action very well to validate whatever things, because right now this is giving a bullish signature, because why reject off of this? Now, don't get me wrong, the markets make an opening tomorrow or this midnight and classify this as a bearish order block, because we have a swing high from here. And if this is classified as a swing high or a short-term high, markets could just make a retest of this bearish order block and continue to run lower, right? But there's a lot of things to consider before you can call out bearish. I'm sure anyone who really has keen eyes for price action will understand that this is a very two-sided week, because this rejection could mean the markets are interested in buy-side liquidity here, and this rejection could also mean markets is just respecting this swing point, which is high red, and next week will just be continuation lower. So why we don't have any validity for long-term buys on dollar index? Sorry, why we don't have any validity for long-term buys on dollar index? We still can, pinpoint what the draw liquidity this week is, because we're having the markets come off of a discount level, which is a bullish order block, and we also have a bearish order block here from the swing high here, and we don't know if the swing point would cause the market to return into this previous weekly low. So there's a lot of things to put into consideration before someone can define what the weekly range is going to be, because currently I do not know what the weekly range is, because there's a lot of conflict in price action, in data, and all of that. So to effectively trade this week's range, I'll need more data, of course, from the 4-hour time frame. And I'm still going to leave, the possibility that the market's returning into relatively equal highs, because since we ran into sell-side liquidity here, and markets invited this level here, this could be a reaccumulation to discount. Okay, it could be a reaccumulation to discount, and this run below this low here could be a total soup, and market returns into a discount and attack by side liquidity here. But I don't know. I really don't know. Completely do not know. So on the daily time frame, all we have here is markets returned into a discount level here, and markets been showing sponsorship here. I don't know if market has any interest whatsoever in trading into this level. This level looks very clean. Okay, it looks like something markets could run towards, like markets could gravitate towards, because when I look at other pairs like USD JPY, we've been talking about how USD JPY has been bullish for weeks. It might have been bullish, but it has been very, very sluggish, and I said that it's because of the dollar index. Okay, there's a lot of underlying weakness in dollar, so it's not allowing USD JPY run gracefully. So we always see the markets return back into a discount. So last week, where I was talking about USD JPY being bullish because of the close above this high, and market opened up with a gap. Okay, the market opened with a gap, and now this gap caused USD JPY to return back into this inversion level, and you can see how the market closed. The market closed inside the range of the previous weekly candle. The market closed inside the range of the previous weekly candle. That's showing some level of support off of this level. Support, this is an order block, obviously. You can see the swing low here. You can see the swing low here. You can see markets closing above the borders of this candle. That's a change in the state in delivery. And you can see the market's respecting this order block. So USD is obviously bullish and it's a correlated pair to DXY. However, DXY is trading, it's a correlated pair. So I'm going to take this one out now because market has gone through that. So that's what we have on USD. So it really depends. Really, it really depends. But this looks still bullish because markets are coming from a discount. But if I want to validate maybe the weekly buys and stuff, I think the market has to trade through this volume imbalance here because the market could actually return into this level for resistance, right? So markets actually return here for resistance and continue to trade lower. But I would want to see the market trade through here and get above here. And it's the same thing, I want to see on, pairs like CAD, JPY, and GJ because all of these pairs here, they're bullish, okay? And I'm thinking, for example, I want to see CAD, JPY 3 into this fair value gap here above this relatively equal highs there, low resistance, liquidity run, and there's a fair value gap and stuff. Market, because we closed bearish here, we could see the market actually trade below previous weekly low. But if market trades below the previous weekly low and we have a bullish changes taking the 4 hour time frame, I think that's worth putting into consideration for the markets to trade into relatively equal highs here, buy side liquidity there. And the same for GJ. GJ, we have a monthly order block, this candle 1 2. You can see markets are respecting this order block, and I'm thinking the markets will trade into the bodies of this candle here, the rejection block. So correlated pairs looks like the yen are still bullish, but there's still a lot to put into consideration before we can determine buys on dollar index. Why I'm leaning on bullish for the yen isn't just because of I think I want to see them trade. It's not because I just want to see them trade high. It's because for the past couple of months, they've been more consistent with data than dollar index itself. So that's why, like I said last week, it's obvious these markets are heavily manipulated because a market that's not trading according to data is obviously manipulated. That's just it. A long story short. So for this week's trading, there's actually a lot to put into consideration. I want to see how London session on Monday is going to trade. Probably would wait out Monday to see how the entirety of Monday's candle is going to unfold. I want to see what key levels they're going to respect on Monday. I want to see how that's going to set up Tuesday's trading and all of that before I can really have pressure, make a decision about the long-term bias. Because from here, and for the fact that dollar index failed to trade below this gap, I can't just classify dollar index to go lower when I know that initially at the start of my analysis, I was thinking they could return into this level here, this relatively equal highs here, and for the fact that this swing point is bullish, okay? And that's what we're seeing here. Markets are respecting a discount, and markets is beginning to show sponsorship. Markets could trade here, draw the group first, but I don't know. And I think the major work will be done on Twitter this week, like last week. Have to make posts of my thought process after Monday's training or probably after London session. Really, you can't really say. It just depends on price action because this level here, this one here, this high is still clean. And for the fact that the market's already invited all of the inefficiencies here, making the swing point high resistance, they could likely trade into buy side liquidity here. So I don't know. So on Euro USD, it gets very weird because during last week's training, I was already getting the hope that we could see markets, run through and close above this consecutive down plus candle, making this a bullish order block, making this week very straightforward. But that didn't happen. It didn't happen. But there is this. There's this, meaning we have a swing low here, we have an order block here. Markets could return into the previous weekly high, yes. But if the markets have any interest in making a top, then of course there could likely be a failure swing. That means market will fail to run through this high and market will sell off. Or market runs above buy side liquidity here and market goes off. So I don't know what the markets are really interested in doing for now because, like dollar index, I said that we could see the market make a retest of this oil block and make a continuation, but it would have been a lot more easier to determine if this week's candle is going to be bearish if we had a closing basis below this balance price range. But that didn't happen, so it's more like very difficult to pinpoint what the weekly candle is likely to do because high probability setups comes from defining the weekly bias, the weekly range expansion, so that you can select any of those days between Monday till Thursday or Friday to trade in the direction of that weekly bias. And most especially, like I would say, the 4-hour time frame, you use it to validate the weekly bias. So there is about a number of things we can actually talk about. So it's obviously the low probability week for me because I can pinpoint what the markets are going to do. Now, the whole idea behind this commentary is not to say, oh, he doesn't know what to do today. He doesn't know how to analyze the market. No, it's for you to learn how to identify high probability weekly ranges that you can easily trade. Okay, and you now understand that, okay, if you're uncertain about price action, the next course of action is to remain on the sidelines until the market reveal itself. Now, I have two things in mind. Based off of market structure, we obviously know that markets make a continuation this week because there's another block here and all of that stuff, but all of this doesn't make sense because when you understand what high time frame institutional order flow is, you understand that key levels are highly subjective. It may look like a bearish order block now, but if the markets are really interested in going higher, markets will go through this with ease. So that's why it's always very important to put into consideration first, what is the draw on liquidity? Once you can identify the draw on liquidity, you can then start putting in key levels second. You don't put key levels before defining the draw on liquidity because it is very subjective. The reason why a run below an old low would be a total sip is because the markets are yet to meet the draw on liquidity. It's because of the draw on liquidity. So you can only effectively interpret market structure once you can define to a large degree and probability the draw on liquidity. Okay, so the markets is showing signs of a bullish weekly time frame, but market structure is bearish. I'd rather lean on a bearish market structure than lean on the predictive bullish, supposedly bullish underlying price action that is, it's looking like markets want to form. So I don't want to put my analysis on I think the markets will be bullish. Rather, I want to hold on to the fact that market structure is still bearish, but we are under a low probability condition because the market is showing underlying strength on the dollar index. Now that's probabilistic thinking. Now that puts you in a very neutral state. I'm not impulsive because I know that high probability shorts would not happen easily in the early portion of this week. I know the markets can go both ways, so I need time to figure out where the markets really wants to go. Okay, and that's how I'm going to approach through my week. Okay, GU, for example, GU rejected heavily yesterday after trading into closing this fair value gap, and that's one of the things I would say. All of these correlated pairs, they will trade in tandem with dollar index, but based off of their relative strength. You can see how GU is trading, EU is trading, USD JPY, all will trade based off of their relative strength. So last week's trading, we also saw that the euro pound was very bullish, and if the euro pound is very bullish, of course you understand that euro is going to show more strength, relative strength compared to pound. And if for some reason dollar index happens to be bullish in the same week, euro pound will be bullish. We're going to see extreme weakness on GBP USD. Okay, so really there isn't so much because I don't know what to say here. I cannot say that we're likely going to see continuation higher. Well, I know for a fact the markets are respecting a premium level, which is this fair value gap here. So we're just gonna wait. We're just gonna see how the markets unfold, and we're gonna see, or we're gonna determine what our trading position is likely to be. Because for now, I don't have any trading position in mind. There's nothing high probability. I need the markets to show me its hand, and then I'm gonna make a decision. So until I catch you in the next one on Twitter, of course, be safe.